Okay, handing it over now to Chris Hughes. Chris.
Right, I don't know how to follow that, but I've been asked to say something about Breaking Views' approach to covering the financial crisis, and I wish I could point to that killer article in 2003 where we predicted to the day when Lehman was going to collapse. I can't quite do that, but we are actually quite proud of how we covered this crisis and the run-up to it. Breaking Views is a specialist website. You could say that we eat finance for a living, but we're also syndicated to newspapers around the world, so we have in mind the general reader as well. So we're a mix of addressing high-end financial subjects, but we want to make them accessible to the ordinary reader, and we like to debunk financial complexity. Our motto is first with the views. We're not trying necessarily to break the next scoop, although we have had some good crisis scoops, but what we're trying to do is we're trying to make sense of the financial world. We're trying to criticize financial transactions in the financial world and say whether things are good or bad. So a few small brags. I think in the context of what we've heard so far, these may sound small, but from the point of view of us being a pretty small organisation with only 10 journalists when the credit bubble was inflating and a small apartment-sized office behind what used to be ABN AMRO, we're pretty proud. So in December 2004, we had a headline that credit markets may be heading for a crunch in 2005. A little bit early, but the fundamental analysis was there. We warned that spreads had narrowed to ludicrous levels. In February 2005, we did an analysis of the UK buy-to-let market, which we concluded was the mother of all carry trades. And there are countless other instances of just ordinary analysis of deals and transactions where we highlighted pretty toppy EBITDA multiples on deals. We talked about what we called the heads I win, tails you lose incentive structure of hedge funds as they gambled with other people's money. And we had almost an ongoing campaign about Citigroup, which we said was just too big to manage. Now, you may say that this isn't these are sort of small observations relative to what actually happened, but they are fundamental to the causes of the crisis. Now, it's often said that in 2006, everybody could see it coming. Everybody could see there was a bubble. And Mark Starks is very instructive there. But I think that our warnings were a lot more severe about the potential for a severe correction. So in November of 2006, we were talking about a vast accumulation of risk in the system. And in January of 2007, we warned that if there was any sudden drying up of liquidity, it could cause generalized financial panic. And I think we're getting somewhere now. My favourite, in June that year, when the party was still going strong and everyone was dancing, we imagined Steve Schwarzman of Blackstone writing a letter to his shareholders in 2012, buying back the stock for $15 and apologising for the terrible performance because there had been a third standard deviation recession that his models hadn't allowed for. And we were saying this in June 2007. As the crisis took hold, we saw our mission as explaining to the world what was going on. So we managed to get the IKB Rhineland sieve, a full explanation of how it worked, into 500 words. Now, you will say to me, well, it would have been better to have pointed out the IKB Rhineland sieve 2 years earlier, but I think that as a service to readers, just unpacking in the heat of the moment precisely the mechanics of these very complex financial structures was hugely valuable. And in the second week of August 2007, when the crisis was really hitting, we did a very simple piece just with all the questions you wanted to know. Why did the ECB flood the market with liquidity? What is commercial paper? Everybody was suddenly a commercial paper expert. Nobody had been talking about that 6 months earlier. And we just gave everybody 100 words how to understand all this. And then as the crisis really deepened, our mode shift more to prescription. So we've helped write the agenda for financial reform, and we've led the way in kind of guiding panicking regulators and telling them how to think about reforming the banks. Now, how did we do this? And I don't want to overstate our claims to having spotted it all, but I think I'd make 3 points. One is, right from the start, Breaking Views was grounded in finance. Now, that might sound like an obvious thing to say for a company that is doing financial journalism. But credit bubble or no credit bubble, we wanted to apply financial thinking to financial stories. So it's natural for a breaking views journalist to think, when they're confronted with a story, to think, say, you know, how is the company going to finance this? Why is this a sensible premium to pay for this deal? How do they get at these synergies? How do they put this value on them? These are the natural questions that we ask when we see a financial story. We also benefited from having a credit expert. When the dot-com bubble burst, it was quite clear that the credit markets had been leading the equity markets, and so we actually saw credit as a beat, and we had a journalist on that, and that was hugely beneficial. And lastly, I'd say that whilst we comment, our comment is very informed. It's kind of reported comment. We are talking to our sources all the time. Whilst you won't see somebody quoted in Breaking Views, and we're not necessarily trying to break news, we do actually speak to our sources all the time. But because we're coming at our sources with our own view, and essentially we're road testing, we're saying, look, we think this is a bit toppy, we're going to write this. Our sources engage with us in a more perhaps more open way, and they share bigger picture views with us, which has, I think, really benefited in terms of informing our reporting. So I guess my summary point is that you know, when doing financial journalism, you really have to think financial. And while you know, we may not have come up with a 5,000-word killer article that laid out the potential crisis of 07 and 08 back in 2003. What we did manage to do with this approach was a constant drip of warning and to give our readers a continual view that there's a bubble emerging and that things were getting toppy, and that this pervaded our entire reporting. Thank you.
Super, Chris. Thank you so much for that. Chris Hughes.